Hello everyone, so today we are going to show you how you could have entered a GJ trade today. First thing we're going to do is get a daily bias. We're going to do this by seeing what the daily time frame is doing, which in this case is making higher highs and higher lows. Daily is in a bullish market right now. Next, we're going to move on to H4 and see what H4 is also doing. In this case, we're going to see it comes from a bullish market, but at the moment it's in a little range inside a bullish market. Next, we're going to go to H1 and see what H1 is doing. Obviously, in this time frame, we can see we are in a downtrend. Why? Well, we are making lower highs and lower lows. So it is bearish. Okay, so now we know that the daily and H4 are correlated in a bullish market, so we're going to look for buys. So now we're going to go to the H4 and we're going to mark our support zone, which is closest to price. You can see we are hitting the support zone right now in the H4 time frame. After we got our support zones marked, we're going to move to the 15 minutes and we're going to mark our liquidity power zones. What do I mean by this? These are zones where price can come down, grab liquidity power, and push up, usually known as fake out zones. I want to see a fake out happen before I take my entry. That way, my stop loss doesn't get hit randomly. Please keep in mind this is all happening in London session. So right now, you can see the zone was touched. So I'm going to go down to the 3 minute and mark our last obvious lower high. This is because I want to see a break of that last lower high and a retest before I take my buy entry as a confirmation that lower time frame has shifted now to the upside. So we're gonna wait for a VOS and a retest. Guys, it is super important to have patience. You must wait for price to make a break of structure. That will be your last confirmation for entry. After a retest, do not take any impulsive entry or anything like that. Please just wait. Here you can see a candle just printed above the last lower high. And you can see it was the body that printed above it, not a wick. So I consider it a break of structure. Now, ideally, I want to see a yellow candle retest that break of structure, then a 3 minute blue candle engulf it to take my entry. But that doesn't always happen. Sometimes price will keep pushing up and you have to adapt to the market. How are we going to do this? Now that price kept pushing up and it didn't take any retest, we're going to go to a 15 minute, 30 minute, or 1 hour and mark our next resistance zone that could be broken and turned into a support zone. Okay, so now that we are in the 1 hour, we're going to mark our resistance zone. This zone could be broken and turned into a support zone for possible entry. In the 15 minutes, you can see we have a resistance zone that was broken, now turned support. So we're going to go to the 3 minutes and wait for the 3 minute yellow candle to retest that zone or get close to it. And then we're going to wait for a blue 3 minute candle to engulf it to take our entry. The stop loss ideally is going to be under that zone, but I don't use more than 20, 18, 15 pips as a stop loss. As you can see, the 1 minute is ranging. Ideally, we want to see the 1 minute come down to make a little fake out. Yes, even the 1 minute will do fake outs before pushing up. So we're going to wait and see what happens. The 1 minute fake out will be seen in the 3 minutes as rejection. So we're going to wait for that rejection to happen of that support zone and then a 3 minute engulfing. Let's now mark our 1 minute support zone of that range to see where price could come down to make a fake out and grab liquidity. As you can see, the 1 minute fake out just happened, which is just a 3 minute rejection, followed by an engulfing 3 minute candle. So right here, I will take an entry and risk 15 pips. Well, why 15 pips? Well, because it happens to be under that support zone, which is great for me. If it was 17 pips, I would use 17 pips. If it was 20 pips, I would have used 20 pips as a stop loss. In this case, 15 pips is perfect. As our first take profit, we're going to use our 15-minute liquidity power zone that could push price to the downside. TP2 is going to be a 1 hour liquidity power zone, and TP3 is going to be the next 1 hour liquidity power zone or an H4 liquidity power zone. All these zones could be hit by price and pushed down, also known as a resistance zone. Now, once you hit TP1, you must decide if you want to close 50% of the trade and put your stop loss to break even. I recommend doing this in prop firms. Keep in mind, you must always win twice of what you are risking. Otherwise, it won't make sense. Have a great day, guys.